Investors and traders, welcome to the channel Market Chart Pattern. Today we'll be taking a look at the key US stock indices. This video is for educational purposes only and it is not a financial advice. We are looking at the S&P 500 E-mini futures daily chart. Today is 26th of March 2023 and it is the weekend review. Guys, here I'm going to clean up the chart a little bit. So I'm just going to remove this ABCD pattern which we had before. I am also going to remove this one. This was where the CD leg expanded. All right, guys. Okay, so here, S&P 500 last week had a wild day. The Fed was out, I believe, 22nd of March. There was something going on. And here, if you remember, in one of our videos before that event, we had pointed out this level of 40, 65, 75 as the level to watch. And what the price did was price really went right to that level, a little bit above, a few points above. Let's have a look. It went, the high was 40.73 spot 75, so it went above a few points, and then it was a big close lower for the candle. Now the now the interesting thing to know is what was this level. This was, guys, nothing more than an ABCD. I didn't draw that at that time, but as you can see, it was A, B, C, D, and we also had a 61.8% Fibonacci retracement coming around this level. So this confluence told us that okay, pay attention to this level and it could be a good resistance, and it turned out to be a good resistance. Look how much the E-mini fell in one day. Then now the next day we didn't have a follow through, so that was an interesting sign. And then the following day, which is Friday, there was a lot of pressure. If you're watching this intraday, it just kept on selling. And then towards the in the afternoon session, towards the late afternoon session, we begin to have good buying coming in. Now this buying came in right at the 78.6% retracement of this CD leg here, and from here it all started, and it began to move higher. Also, this level of this low of 39.37 was very close to the opening of the E-mini session on Sunday night. So it kind of went back to the opening of the Sunday night, which is basically a kind of a mean reversion thing. So it kind of went back to the mean. So a number of confluence things came together. So now, guys, what we are looking at, we still have a bullish bias for the stock indices as in the US, especially the S&P 500, unless this low is taken out of this 78.6% retracement of last Friday. It looks like we are in this ABCD moving higher to around 4110 level actually. This is highlighted in green. So ABCD here. We also have another a bigger ABCD which could actually take us right back to the tops around 4171. So we have a nested ABCD situation. So this is a smaller one, and then the bigger one is 4171. Also notice that we have this trend line where the where the it crossed with the 78.6% Fibonacci retracement. So there were a number of things coming together. Price came in right to the trend line and then found buying, and up it went. So guys, there are a few key things. One is that if this level breaks down of last Friday, then the chances for a return for the December lows is it will become much higher, and would be an indication that perhaps this cycle which we have been looking at, where we thought the prices are being driven higher, might have crested earlier, and actually prices might be, some bigger cycle might be pushing it lower, but we'll have to wait and watch for the key levels to be broken down. But for now, the bias is to the upside, and The smaller green cycle ABCD takes us to about 41.10, and then the other ABCD is higher at 41.71. And if we look at just from Fibonacci retracements, so yeah, I mean this 41.10 is within, well, it's a little bit far from the 78.6% Fibonacci retracement. That could also give some resistance. All right, guys, we're gonna move to the NQs. So NQs look very strong compared to the S&P 500, and they are at a level where we have this resistance. We also mark them with these brown lines, and the price is kind of stuck in here. So here we are watching the price action, but looks like if there's gonna be a bullish move higher, then we have the 78.6% Fibonacci retracement coming around 13,092, which actually was pretty much touched on Wednesday 22nd of March, with the high being 13,082. We have higher target of 13,275. Perhaps the price might make an attempt to that if things remain strong. Now let's take a look at the small caps Russell. All right. So Russell 2000 has been indexed. You can see how much weaker it is after completing this big ABCD. Now the thing which we are really watching is that it's been one, two, three attempts. So in fact, there is a support like this where it is coming down, and all is finding support from 78.6% Fibonacci retracement, and looks like we are going to have some perhaps some unless this support gets taken out, it looks like it might begin to go up and challenge these highs again. So in other words, within this trading range, it might try to attempt the to go towards the higher to the top of the range again. Okay, and let's take a look at YM. All right, guys, so in the YM, again here it just keeps on finding support from this 50% level, and here I believe it had done some sort of a ABCD pattern. Let's double check. And yep, so it has completed this ABCD pattern, and looks like maybe it might be doing an ABCD pattern to the upside. And if you look at like this, it's to be drawn a little bit higher. Yeah, so maybe it goes up to the 61.8% Fibonacci retracement, and the ABCD comes around 33,322. So that might be another level for us to take a look at here, if there's gonna be buying coming in the market. From these levels, we'll have to reassess what the market is doing. And guys, what is left is, let's take a look at the Dow Jones Industrial, but in terms of cash, it's a pretty similar setup. So guys, this is what we are watching in the stock indices. And here one more concept I will begin to introduce slowly but surely is the concept of standard deviation, because there is a lot of option related activity in the US stock indices, especially since the COVID years. The options activity is is doubled compared to what it used to be in terms of volume being traded. So the standard deviation levels are also another tool we should begin to pay attention to, especially the weekly levels. So I will kind of do a video about those, how we can work those out from a back of the envelope kind of rough crude form of calculating the levels which we are interested in. And if you happen to have an options platform, then obviously you can work out by looking at the platform the standard deviations. So guys, this is what we are watching. The video is getting a little bit longer. If you like our videos, how we analyze looking at the pattern formations, give Fibonacci retracements, then please do subscribe to the channel. And if you like our analysis, then please do hit the like button, and that way I know that people find value from an educational perspective in these videos, and just encourages me to keep on making more videos for educational purposes. So thank you very much. If you really like the content, then please do hit subscribe. Good luck and good trading.